Dear viewers, welcome to this episode of Your Life, Your Money. Retirement planning is a major work. It's a big challenge for the persons who are planning for it, for the advisors who are working on it. There are so many variables, so many things to be factored in. In this episode, I'm going to talk to you about 10 challenges people will go through when they try to do the retirement planning. Every point that I'm mentioning here is very important. Stay till the end of the video. Watch this and be guided on the retirement planning. This is NRI Money Clinic for you, and I am Dr. Chandra Karbad, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, life beyond 60 is a life on the slippery road. How does this pan out is not known to anyone. There are a lot of things which will happen in this. We can divide this into two parts. The first part 60 to 75 and the second part 75 and beyond. 60 to 75 is a period called the golden years of your life where you are supposed to enjoy your life, and 75 is a downhill journey. But whether it will happen to each and everyone, what are the challenges that you face and how you have to handle this, and what are the factors you have to keep in mind before you do your retirement planning, I'm going to discuss in this video. Let's look at them one by one. But before I start my points, what I need to talk to you, let me tell you one thing. Retirement planning is one area where you have to depend on advisors. Whether you are a do-it-yourself investor, you are an investor who otherwise also need advisors, you must consult. Why? Because you will not have experience of how retired life is going to be like. If you depend on what people say on the YouTube, people will say you should have so much of a money. I won't say that they are wrong, but your retirement planning is not limited to money alone. There is an enormous amount of work that needs to be done. There are enormous data points that have to be considered. There are things which you have to handle it from a quantitative metric. There are things which you need to handle from qualitative metric as well. So this is one area you need advisors. Advisors who are experienced, advisors who have spent enough time in the market, advisors who have spent enough time helping lots of people. We at NRI Money Clinic understand retirement planning from all directions. We have helped thousands of people across more than 60 different countries to design the retirement planning as per their wish. We do the fact find, we understand their life, and we design things for them as they want. If you are a person who is looking out for an advisor's help to design your retirement planning, you shouldn't be delaying on it. You should consider using our services. How can you reach out to us with your request? Very simple. Our numbers are given here in the description box below. There is a link also which is given there. Just click on the link. It will take you to the WhatsApp. Send us that message, and our team of experts who specialize in retirement planning are ever ready to help you. Why delay? Send that message now. Now look at the challenges one by one. Challenge number one. How long do you live? Neither I know, nor you know, nor your advisors, anybody else knows. It is the game God plays with you. You could be living for 75, 80, 90, all possibilities are there. Let's say you retire with a defined amount of money. You have a certain amount of money and you live only for 10 years. The way you handle money is something different. What if you were to live up to 85 to 90 years, you have the same amount of money, the number of years you are going to live is pretty long. The way you handle that money is different. Now you do not know the answer, how long you are going to live. If the statistics are to be believed, the life expectancy of people in India in particular and even in rest of the world is on the rise. That means thanks to advancement in medical sciences, thanks to improved living standards, people tend to live longer. When you do not know how long you are going to live, it throws up a challenge for the planners to design your cash flow. This is a big challenge, and your planners have to find a solution for this. Challenge number two. Who is going to live longer? Are you going to live longer, or your spouse is going to live longer? Some people said don't use the word spouse, say partner. It's okay. Fine. You can call yourself either a partner or spouse as you wish. That's fine. Now, if the spouse is wife, the data shows women live longer than men. The yesteryears, people of my generation, about 10-15 years younger than me, used to marry a lady who is younger than them. Normally, they used to be younger by 4 to 6 years, younger than their age. Now, if women were to live longer than men, plus the age gap between husband and wife were to be large enough, then it throws further challenge. There is also a challenge here. If men were to pass away earlier, leaving behind their spouse, then she has to manage money and she is going to live longer. The challenge here is that in most families, women do not take enough interest in the financial affairs. When the husband passes away, she has to manage the money and she cannot do it. So the two challenges will come in. Number one, she is going to live longer, she is getting older and she cannot handle money. How do you design the cash flow in such an event? Can you go through the normal route of beating inflation? We have to do it like this, keep it in the bank, keep it in 100 different places. Do we have to simplify? These are the challenges you have to face. So when you design your retirement planning, find out what is the age gap between you and your spouse, and those things have to be factored in before we set out a cash flow planning for you during your retirement days. The third challenge is your health status and your spouse's health status. The health status has implications at two levels. One, if you are a healthy person, chances are that you are going to live really long. If you are not obese, you don't have the problem of diabetes, blood pressure, arthritis, the usual age-old problems which affect people. Chances are that nature has already selected you to live longer and there are no challenges of health because of which you might live long and you require a different planning. On the contrary, if you have health issues, you have chronic health issues, it will call for proper provisions for your health insurance, and over a period of time, your health issues may consume a lot of money. You have to maintain a liquidity, you have to maintain a pool of money to making sure that if you were to be challenged because of these health issues, and enough money has to be found for that particular issue as well. So the health issues will also be a challenge on your way of designing proper cash flow. Challenge number 4. The deadly problem of reinvestment risk. People of my generations have seen interest rates ranging from 14% on the FD down to all the way up to 4.5%. Today we are at the peak of interest rate cycle. Today the banks are giving you around 6.5 to 7% depending on your age. But remember, we are at the peak of the interest rates. The interest rates will move in cycle. Obviously, in the near future, interest rates will head southwards. It's just not the interest rates will head southwards at some point of time because of the development which happens in the economy. Interest rates will see a downward tick. And as we think, in next 5, 7, 10 years, probably the interest rates in India will fall down to a level of 3 to 4%. You cannot imagine that today, but if you watch the trends, if you track the interest rate cycle over last 30 years, if you track the interest rates in the developed world, and if you can build a correlation, we are heading towards that. Think about a retiree. He keeps money in a bank fixed deposits. His intention is to live out of the interest income which comes from this fixed deposit. If the interest rates were to fall in due course of time, what happens? Remember, you kept the money in the bank FD for 10 years. And let's assume that you're going to get 7% on whatever the monies that you have kept. For next 10 years, you have an assurance that I'm going to get so much of interest from the savings. Now in 10 years, whatever the interest rate you're getting today will lose its purchasing power because there is an inflationary component. You get the same amount of interest, but the prices rise year after year, whether it's an increase of 2-3%, whether it's an increase of 5-6% or 7-8%. But the interest component, the fixed income, loses its value over a period of time. Now suddenly after 10 years, when the FD has to be renewed, and if the interest rate is 4%, what happens? Already the interest has lost its purchasing power. Now you have to renew the FD at 4% level, the prevailing interest rate of the day, which means your income itself is getting half. To complicate the matters, the taxation of the day will also be an issue. So the retirees have to keep in mind the reinvestment risk. It should not be pushed under the carpet. This is the deadly risk the retirees of today go through. They should visualize the interest rates are going to fall in future. They are going to live longer in normal circumstances. Unless you factor in and design proper systems to make sure that you don't go through the reinvestment risk, your retirement will never be a bed of roses. It will start going downhill for want of money. Challenge number 5, liquidity risk. What is liquidity risk? A liquidity risk is you have got assets. It could be land, it could be annuities, or it could be anything which you have got assets. Either asset has a value or asset gives you cash flow, but you cannot touch the principal amount. Imagine a situation if there were to be a major road accident, or if there were to be a deadly health issue like an advanced cancer which requires humongous amount of money, and you have assets but you cannot liquidate the asset. That creates a problem. So you have to look at how liquid your assets are. It doesn't mean to say that every asset that you have should be in liquid form, but you should be in a position to calculate what could be the maximum liquidity that could be required, from where I'll get this money. Have I made a provision for the required liquidity in my retirement planning? This is a challenge which you have to conquer. Liquidity has to be provided in your retirement planning. Challenge number 6, volatility risk. Volatility risk is you have certain assets. Let's take, for example, gold. The gold prices are not stable. It can move up, it can come down. Likewise, you might be having the stocks, or you may be having the mutual funds. These could be the aggressive equity mutual fund. Their prices can be very volatile. They can move up and down. Suddenly, if the market results in a correction or a crash, then the amount of money what you have will go through the volatility risk. If you do not need that money at that point of time, it may not create much problem for you. But you have depended on an SWP of a mutual fund, and 100% of your money is in the mutual funds, and you depend on an SWP. You are made to believe that the SWPs are very safe, and you design your retirement cash flow using only systematic withdrawal plan. You are up for deep trouble. Instead of mutual funds giving you the money, because of the volatility which comes in, because of the reason that the markets may remain down for many years, you may start consuming your capital and you may run short of the money at the fag end of your life. Volatility is a risk you have to conquer, or you should know how much of an exposure I can take to the volatile assets. Do not believe that mutual funds can solve all the problems of a retired person. Mutual funds are a must. They are the great tools. I am not downplaying them. I am stressing they are very useful, but you need to know which kind of mutual fund, how much is the exposure control, how much is the sustainable withdrawal from mutual fund. These factors have to be taken into account. Without knowing the volatility risk, you go towards volatile assets and don't feel sorry during your retirement days. Challenge number 7, the inflation risk. You could be 60, 70, 80. You could be a person of today's age. You could be the ones who will retire 20 years later. One thing which remains constant is the inflation. There will be inflation. It could be 2%, it could be 3%, it could be more than that as per the situation which develops in an economy. But inflation is there. And however small the inflation may be, it erodes the purchase price of the cash flow that you derive. If you depend on 100% on a fixed income, it gives stability to your cash flow. You feel very comfortable that month after month, my bank gets credited with so much of a money. But over a period of time, the amount of goods and services that this will buy will start coming down. So fixed income is a great tool. It's a must-have in retired person's portfolio. But depending only on fixed income, putting entire thing on fixed income is neglecting the inflation risk which you will pass through. So you have to factor in this issue of inflation and design your cash flows accordingly. Challenge number 8. The place where your children are going to go and settle down in life will have a bearing on retirement cash flows. It's a human nature. You want your children to be closer to you. Your children want to take care of their parents. It's a human nature. At the end of the day, it's a family. But if your children are living far away, they stay in different places. Let's say that I'm in Bangalore and my son lives in Delhi, or my son lives in another country which is far away, continents apart. It will be an emotional challenge. Frequently, you have to visit your children or children have to visit you. This will all require an amount of cash which has to be factored in. Let's say you fall sick, or at your fag end of your life, you can't be on your own. You have to go and stay closer to your children. And it could be in another country. It can become a problem. So place of your children's stay, where they settle down in life, has a bearing on how do you design your retirement cash flow. Challenge number 9. The changing societal trends, emotional insecurity, the generational gap, all these will also create a problem in the financial space as well. The retirees, especially when they pass through 5-10 years of retired life and they see my end is coming closer, the way they behave becomes a little bit funny. I have seen this in the life of so many people. They come to me, they confide, they talk about this. It looks very, very funny. See, somebody is living in Delhi. He is from middle class or a lower middle class, and his son lives in US. And this gentleman wants to donate a big chunk of his retired corpus to his son out of compassion. What difference does it make for the son who is earning in dollars, right? It's a wrong decision, but it doesn't go into their mind because they are going through an emotional insecurity. They think by doing this, I'll become a hero in front of my children. They will not understand this because when they are overpowered by the emotions of insecurity, becoming weak, and the end become visible, all these problems they create for themselves. Unless you know consciously, I should not do these kinds of a mistake of donating my money to the children at the fag end of the life, it will neither help me nor it will help them. It will only complicate things going forward. Your retirement will not become a proper planning for you. So remember, when you move to the other end of the life, you may start behaving funny and you may take not the proper decisions with respect to your money. Challenge number 10. The innate desire in an individual to live in the comfort zone. This drives a lot of actions in the life of everyone. Everyone has that innate desire, I should live in comfort zone. Let me explain. My father is 90 years old. I and my brother live in 2 cities of Mangalore and Bangalore. My father lives in a place called Tirthahalli, which is nearby. At this age, he's fit and fine and he wants to live alone because that is where his comfort is. So in a month's time, he spends a few days with me, he spends a few days with my brother. But finally, his comfort zone is there in the place where he has spent his entire life. He's alone, but still he wants to be in the comfort zone. Retirees make one mistake. They think their comfort zone is living with their children. So they end up their affairs here in India, sell off the properties, go and stay with their children somewhere abroad. After some time, what happens is they become a burden on their children. They cannot cope up. They will be out of the comfort zone because children's life is different. There is a generation gap. Children have their compulsion. It's an aspirational generation. They are busy. They are busy with their life affair. They have to build their life, and the loneliness of these parents creates problem, and they decide to come back and they have to rebuild everything. You have to be conscious about where is your comfort zone. Do not go out of that comfort zone. Do not take decisions which will have financial implications because of going out of this comfort zone. You must identify the comfort zone, have enough leeway, have enough assets or monies that are available to you in case if you decide to live in that comfort zone. Every person will feel very comfortable in his house, in his town, in his gully, amidst his friends, amidst his age group of people. Going and staying with your children will make you go out of that comfort zone. Have at the back of your mind, you should be living in your comfort zone to the extent possible, to the last day of your life, to the extent. Finally, yes, everyone has to exit this world. A day will come where you may have to become dependent on somebody else. It could be your children, it could be an ashram, it could be a old age home, or it could be anything. But to the extent possible, identify where is your comfort zone and plan your retirement cash flows, keeping in mind you have to live in this comfort zone, not in an alien land. Dear viewers, I have told you the 10 major challenges on the way to building the retirement cash flows. Are these the only one? No, there are countless of them. If I go on listing from my experience of interactions with many people, I will go on and on. There are interpersonal issues. There are issues that many people do not have the required amount of money. There are people who come to me with the mistake of spending too much on children's education, leaving nothing for them during the retired life, depending on children. Intergenerational problems, insecurity problems, the guilt within them, the fear of exiting this world. All these things will make retirement planning a very complex process. I have no hesitation to say you must consult an advisor that is where an external help will be available to you, take into account all the factors that has to be taken into account while you design your retirement cash flows. Dear viewers, hope the video that I have done helped you to understand how complex the retired life could be and how difficult it is to plan retirement planning. If it did help you to understand the challenges that you'll go through, please do give me a thumbs up. If you are a person who is yet to subscribe for the channel, do not forget to hit the subscribe button right now and press the bell icon. I will give you 2 videos every week, every Tuesday and every Friday at 4 p.m. Do not miss even a single video. They are all filled with value. And do not forget to share these videos with your near and dear ones, friends and relatives, and on all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic, with yet another thought next Friday on Your Life, Your Money. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.